The Lagos Chamber of Commerce and Industry has called on the federal government to cut taxes on basic food items to mitigate the effect of rising inflation on the most vulnerable Nigerians. LCCI made the call against the backdrop of the Consumer Price Index data released last Thursday by the National Bureau of Statistics, with the headline inflation rate up to 22.41% in May. In a statement made available to newsmen, Director General and LCCI Chinyere Alumna recommended a pause on interest rate hikes to relieve the pressures on economic agents. LCCI expressed concern that fuel subsidy removal and the floating of the Nigerian exchange rate will come with its inflationary impact. Rice produced from the Lagos State-owned 32 metric tons per hour Immortal Rice Mill in Ikorodu has now hit the market. This was followed by a formal launch of 5 billion naira Eco Rice further contract program by Governor Babajide Sanwo-Olu at the floor of the Commodities Exchange Market USA building in Marina on Wednesday, marking a significant milestone in the state government's efforts to promote agriculture and enhance food security in Lagos. The further contract, which is a joint initiative of the government-owned Lagos State Rice Company and Commodities Trade Net Limited, is the fourth series of 30 billion naira private commodity notes insurance program facilitated by Lagos State government to ensure undisrupted parties supply, enhance quality management, transaction efficiency, and transparency. Commodity brokers said that encouraging performance recorded by Eco Rice at forced trading in the commodities exchange was due to its well-cleaned grains and high-grade texture, which positioned the crop for fair competition with imported rice in the market. Eco Rice is laboratory tested to have less than 2% impurity and 14% moisture content. Sanwo-Olu said that the Eco Rice contract program was a game changer launched with the objective to make Lagos a hub for agricultural production and processing in the country. The Debt Management Office DMO has warned the federal government against additional borrowing, saying 73.5% of revenue generated this year will be used to service debt. The DMO gave this warning as part of recommendations to the federal government following analysis of the nation's debt profile in 2022. According to the DMO, the projected FGN debt service to revenue ratio of 73.5% for 2023 is high and cannot support higher levels of borrowing and is also a threat to debt sustainability. Consequently, the DMO advised the FG to focus on increasing revenue generation, stressing that attaining a sustainable debt service to revenue ratio will require increasing FGN revenue from 10.49 trillion naira projected in 2023 budget to about 15.5 trillion naira. The daily shipping position document from the Nigerian Port Authority shows that petroleum product led the import chart during the first quarter of 2023 with a total of 827,080 metric tons of fuel. The document also showed that bulk wheat was placed second position on the chart with about 433,774 metric tons. Bulk sugar with 242,755 metric tons came third. A breakdown of the commodity import showed that for petroleum product, which is 185,546 metric tons, came through the Lagos port in January, a total of about 391,425 was brought in February, and the month of March recorded 155,676 being the lowest for the month. Some of the petroleum products include premium motor spirit, PMS, automated gas oil AGO, otherwise known as diesel, aviation fuel, dual-purpose kerosene, also known as DPK. For bulk weight, which is 172,851, were recorded in January, while February and March recorded 141,441 and 217,792 respectively. Nigerian aviation handling company NACO PLC has recorded a profit before tax of 3.8 billion naira in its 2022 financial year, a 315% increase against 925 million naira in the previous year. The ground handling aviation company also recorded a revenue growth of 63% of about 16.7 billion naira against previous year's figure of 10.2 billion naira. Speaking at its annual general meeting, AGM, NACO's chairman, Dr. Siende Fadeni, stated that he is pleased that the company has remained resilient, achieving some significant milestone and thereby delivering value to the shareholders. According to him, this was due to a combination of factors, including the increase in aircraft handling rates, onboarding of new routes by some loyal clients such as Qatar Airways' expansion into Kano and Abuja routes, and Ethiopian Airline addition of Enugu routes to its destinations. Now, up ahead, value of FGN bonds down by 93.2% to about 183 billion naira. These and more after this commercial break.